Hello and welcome to BioBiz Buzz, the podcast where we dissect the latest trends, breakthroughs and challenges in the biotech sector and speak to key stakeholders who are actually driving a lot of that change. I'm your host, Mike Ward, and I'm the Global Head of Life Sciences and Healthcare Thought Leadership at Clarivate, which is a multinational provider of data, insights and intelligence that helps healthcare companies actually accelerate their innovation. In this episode of BioBiz Buzz, I'm thrilled to welcome Michael Altorfer, who is the CEO of the Swiss Biotech Association, to discuss his recently released Swiss Biotech Report 2025. The report, which actually launched early in May at the Swiss Biotech Day in Basel, paints a picture of remarkable resilience in Switzerland's biotech sector, despite the fact that there are financial headwinds globally, with revenues holding steady at 7.2 billion Swiss francs, capital investments jumping about 22% to 2.5 billion Swiss francs, and private companies setting new records in funding and R&D. There's certainly much to celebrate. Yet beneath these impressive figures lie complex dynamics, challenges, and strategic choices that merit deeper exploration. So the report's theme, the power of international alliances, comes also at a time when many countries are actually beginning to embrace protectionist policies and reshoring initiatives. So there's plenty to talk about. So Michael, thanks very much for joining me and giving me an opportunity to talk about some of the sort of key findings of the report. I'd like to first start with the sort of the concept of the have and the have-nots. The report indicates that private biotech companies raised a record 833 million Swiss francs in 2024. But as in many other places, we're actually sort of seeing that funding is increasingly being concentrated in fewer and fewer ventures. And those ones are often led by successful serial entrepreneurs. So I was just wondering, what underlying factors is driving this concentration in Switzerland, and what implications might this actually have for innovation within your ecosystem?
Well, Mike, first of all, I'd like to thank you for giving me the time to be on the podcast and also for having spent the time to join us at the Swiss Biotech Day. It was great to see you, and thank you very much for diving deeper into this data. Indeed, we have seen on one hand record figures with regard to the funding of biotech companies, in particular the privately funded companies. And it's been a trend, not just last year, but a trend that has actually started probably about 4 years ago after the COVID pandemic, that we have seen that the financing rounds tend to become bigger. And at the same time, maybe I call it more professional and more comprehensive. I think there's various factors that have led to this trend. One is a simple protection of where companies have invested before. So there are biotech investors that in an environment that is a bit uncertain, that certainly has seen a very tough environment of the public sector after COVID, that they foremost want to protect, shield, and reinforce the investments they have made before. So rather than investing in new ventures, they want to secure the ones that they consider to be important to them, and they focus on them. The second is that we all know that spending time looking for funding is, of course, also deviating energy from looking onto the operations and advancing existing projects. That is certainly something that we want to avoid and the investors want to avoid. And therefore, people are very cautious in making sure that whenever it's possible, the management teams, in particular the CEOs, spend the focus on advancing the portfolio and not getting derailed. And in this sense, many investors prefer to actually secure a bigger round that secures more runway rather than checking back with the companies every 6 or 12 months. And that is certainly a second factor. But that factor also absolutely requires the trust. unless the investors have the trust in the management team and the CEOs in particular, they will not be ready to go for these larger financing rounds.
Yeah.
But also, I think is maybe the third factor is that we see over the years an increasing predominant factor that is related to the syndication. It has become rare that companies are driven by just one or two prime investors. We have more the general attitude that professional investors like to team up. Yes, there will be one or two lead investors, but then there is also a significant share of a financing round covered by other partners. And it is rather rare that investors want to have the majority in a company, but they rather prefer to be in a journey together and want to have like-minded investors, professional partners to strengthen them and to be together in the same boat.
Yeah. So, I mean, Switzerland is obviously famous for banking and, so asset management, etc. So I just wondered, are there any sort of strategies in place to sort of mobilize more of that capital into newer startup biotech companies and almost redress some of that have-not imbalance that exists?
You are right. We do have a strong financing industry. We have definitely huge wealth accumulated in Switzerland and being managed by the asset managers. But at the same time, it's not uncommon and not unknown that the typical Swiss investor is rather risk averse. And so if you look at the funding of the Swiss biotech companies, it has been an overall increase that is significant and remarkable. But this increase of funding to the tune of now 2.5 billion a year is not really driven by Swiss investors. The vast majority of these investments come from foreign investors from all over the world. We have greatly benefited by the fact that biotech funding has been globalized to a large extent. We nowadays see investors joining us from all over the world, whether it's Asia, the US, Europe, and often combined in even the very same in financing round. So we are used to attract funding more often than not from outside of Switzerland. Nevertheless, of course, we do reflect about how could we tap into investors that are in Switzerland, in particular into investors groups that have not been active at all. Foremost, that's the pension funds, that's institutional investors. It's also a good number of the family offices that are obviously rich and have capital to deploy, but have been hesitant at times to invest into what they consider to be a risky industry. And we all know that individual investments into biotech companies indeed represent a huge risk because the attrition rates are tremendous, not just in Switzerland, that's just the same in any other country or region. So if we were to find ways and means to offer these, let's say, investor groups that have been passive in the past, we definitely need to find ways to operate in a way that we can offer investment vehicles that have broader portfolio character, that can offer a different risk profile altogether, because otherwise there is no chance that we will attract their appetite. They do observe, they do monitor what we're doing, but so far they stood at the sideline. And you have seen that we had one presentation at the Swiss Biotech Day by the stagnation funds that are now very actively pursuing such an approach, providing a fund that is specifically tailored to pension funds and institutional investors. And I think that's the way to go. We cannot expect to attract such groups that have been passive all of a sudden opening up to the biotech sphere is not realistic. And I think also it's important that we can offer complementary type of financing instruments also with regard to diversity and offering the flexibility to support different type of biotech companies. You have seen that also in our space, There have been the emergence of many different type of new ventures, some driven by AI, by health tech, data-driven companies, some more driven by diagnostic approaches. And all of them warrant funding, but sometimes require different type of investors. The same is, of course, true for the whole space of industrial biotech applications, again, typically attracting other type of investors.
Yeah, I mean, you mentioned that it's a fairly common issue, particularly amongst other sort of European countries are trying to, I guess, deploy or mobilize the sort of the big pension funds to move in the space. You mentioned also that actually the Swiss biotech sector is attracting international investment. And in fact, a key theme of the report was international collaborations too, as being a key driver for Swiss success. In the sort of the current environment where we're sort of seeing a growing protectionism, is this potentially creating a sort of a vulnerability for Switzerland?
It's certainly clear that for a country like Switzerland that virtually has no local market, is operating in a global industry as the life science industry is overall, and most specifically in the therapeutics area, where we are certainly not developing any product for Switzerland alone, and it only makes sense to put forward a global business case. Any constraint to open international collaboration is a potential threat, and is not just a potential threat to limit our ability to operate effectively, but it is, of course, also a potential threat that at some point we may not have access to international talent. We may not have access to international sources of innovation, and potentially also the currently available access to global funding may be deteriorating. So those are definitely the three key factors from the perspective of a small country that can only be successful by collaborating internationally. We are looking for full access to any country in the world, to have access if any type of innovation were to be discovered and developed in such country, talent that is in that country, and funding that can come from that country. From our perspective, we are completely agnostic. Whether that is Asia, whether that is South America, whether that is North America, whether it is Europe, you can basically pick any region in the world. That's also why at the Swiss Biotech Day, we are entirely open and interested to attract to the global village, to our platform for international delegations, anybody around the globe. We have seen Australia joining us this year, which has been a first, as they have joined. A number of countries from Europe have been here for the first time, the Nordics, Belgium, Czechia, to name a few. But we also had a delegation from Iran, which I was very happy to see. You know, it really points to the fact that Switzerland is seen not only as a global host, but also as a country with an open mind and really a focus on science and international collaboration rather than power play. We have no chance. Obviously, not only do we not have a significant market size to offer, nor do we have the power to play any power games. So for us, it's natural that we are looking to keep the doors open all over the world.
Right, yeah. So because obviously there are lots of competing bioclusters. Everybody wants to attract the biotech sector to their countries because it's seen as a sort of a source of innovative economic growth and also high-paid jobs. I mean, I noticed in the report, you know, you were talking about how even just in 2024, you saw employment growth in the sort of the Swiss biotech sector rising, particularly in the sort of CDMO space. Is this something that you think is sustainable, or also just this focus on CDMOs? I mean, do you think that might sort of divert the focus away from R&D?
You know, in a sense, it's something that is both a necessity as well as a tool. If we want to continue to have this growth that we have enjoyed over the last decade or so, which was in the range between 5 and 10% per year, and again, last year, we had about an 8% growth of the talent pool in this space. On one hand, we can only sustain such a growth if we attract talent from abroad, because as much as we dedicate a lot of effort and funding to the strong universities of applied sciences, but also to vocational training, we will not be able to generate the number of talents that you would need to sustain such a growth. So, in other words, if we are not able to maintain the attractiveness as a country for foreign talent, then such a growth is simply by principle not sustainable. At the same time, of course, growth also needs to be sustained by the business need. You cannot just hire more people and then somehow grow artificially. You will have to build businesses that can prevail, build businesses that are attractive and are needed, and generate products that finally also generate the revenues that sustain operations of these companies. So it's always a fine balance to find, on one hand, to put forward the good reasons why you need more talent, and at the same time then also be attractive enough to find that talent. And naturally, talents also similar to the funding are more and more global. They are more and more flexible to move. But what may be even more important, there is more and more the recognition that companies can also be built with talents and leadership teams that may not be in the same country at all. So I'm always saying I'm not in the moving business, I'm in the connecting business. And whether or not people then want to or need to move for a certain business to thrive is really up to the respective management teams, investors, shareholders to decide. But what definitely is needed is the conviction of everybody that we have the framework to continue to innovate, to continue to establish new ventures, so we can convince investors and pharma partners alike that they provide us with the support we need to build these businesses. And in that sense, whether or not the people are sitting in Switzerland or whether they are sitting in other locations is not so essential. But what is essential is that the framework are convincing. And that is, of course, on one hand, the ability to see that intellectual property can be protected globally, that we have a reliable and predictable pathway to market access, and that within the global framework, there is reasonable respect for this type of products to have market exclusivity so that the successful projects can indeed lead to the revenues to support further and further R&D spend and investment. Now, you are absolutely right that probably by now almost any country in the world seeks to establish a biotech hub of some sort and seeks to be a part in that global healthcare innovation coordinated collaboration approach. For Switzerland, on one hand, we try to make a strong contribution by investing in education ourselves, but we also try to make a strong contribution by providing new ventures, new good ideas, innovative ideas. We are very happy that for 14 years now, the WIPO has put us atop of the Global Innovation Index, which obviously has several factors that play into it. But having the ability to attract international talent is certainly one factor that is essential. It's quite remarkable. We had an analysis last year where they looked at who were actually the most successful entrepreneurs. This was not limited to biotech, but was more a deep tech cross science-based industries. And it was like the outcome was like 78% of the most successful entrepreneurs were actually not Swiss. They happen to be in Switzerland and they like to work in Switzerland, but they very much complement the strength of the ones that were born here. And we are very happy about that, of course, because all this international talent also facilitates international collaboration, all the different cultural backgrounds, all the different languages they speak, all the different ways how they can understand how a collaboration can be set up and can be implemented successfully is a big plus and hard to instill in Swiss that are born here and have, of course, their own cultural background, but may not be equally well positioned to support such international collaboration.
Yeah, I mean, you mentioned that talent, as well as the finance, is very mobile. It can go anywhere. So, clearly, Switzerland, you're competing with some of the hubs. But you have the advantage that you got with a lot of these sort of successful clusters. you've got some big pharma. Two of the biggest 10 pharma companies in the world are based in Switzerland. However, in direct response to maybe the threat of the sort of US tariffs on pharmaceutical imports, etc., we've seen both Roche and Novartis announce multi-billion-dollar investments in the US. So, for example, Roche has pledged to invest $50 billion over the next 5 years, creating 12,000 jobs in the US and expanding its US manufacturing and R&D facilities. Novartis similarly has committed $23 billion to build and expand 10 US sites, including a new manufacturing plant and an R&D center. With these moves, are they going to undermine the sort of the lure or the influence of the Swiss biotech sector if they're migrating westwards?
I mean, you correctly said that the presence of the big pharma companies is an important element of the attractiveness and strength of our biotech hub. I would equally stress the importance of successful and high-ranking universities, and also the CMO business that you mentioned before. We have seen a great development of the multinational CDMO companies when it comes to the manufacturing of complex molecules, biologics and peptides and others. So those three elements are all essential for the success and continuous success of the Swiss Biotech Hub. Now, both the CDMOs as well as the multinational pharma companies are already established as global organizations, and they have not just since this year, for many years, prepared for changing frameworks in different parts of the world. And if I take the example of Lonza, and I could just pick equally well any of the pharma companies, they have built a presence in Asia in multiple locations, bring the presence in Europe, multiple locations, and the same in North America. So, however, the framework conditions may change, they are already present locally and they can react to such changes. For us, this would in itself not really change much. And also these fairly significant numbers like the 50 billion or the 23 billion you mentioned, if I put that in relation to what Novartis and Roche invests in Switzerland, which is also typically per year 5 to 10 billion Swiss francs in the R&D space, so over 5 years, you also reach some 25 to 50 billion. If you think that the US is covering 340, 350 million people, and we are only 10 million people here, it is still a relation that is actually quite normal for these type of companies to invest over a period of 5 years. And equally, as I mentioned, the CDMOs will prepare in the same way. What would change is if all of a sudden the pharma companies would move out entirely. Absolutely, that would make a big change, but I don't see this happening. And I don't see strong reasons why all of a sudden they should move away from this global perspective where they want to be in several locations, being prepared for different changes that may happen. And you and I, we both know that development timelines for new products anyway are in the range of 10 to 15 years. So we're looking at fairly short-term changes that may also be countered. We have ongoing negotiations. Very happy to see that Switzerland again can play an important role in that. And even if we are just the host, but at least we seem to be able to help to facilitate these discussions. And so I hope that what is certainly the biggest problem at the moment, that's the uncertainty, that we can get rid of that uncertainty over the course of the next 3 to 6 months, and then we will see more clearly. If we were to endanger global flexibility of talent, if the global availability of funding for biotech, and as I mentioned before, if you would observe a deterioration of the framework conditions with regard to IP protection, market access, and market exclusivity, then indeed those are factors that could greatly endanger our potential to flourish and continue to build on the strength that we have established. But I don't really see that. Maybe I'm too optimistic, but I really think we have open doors around the world. The Swiss Biotech Day has shown the great attractiveness of us as a host. So I'm very, very, very positive.
Being optimistic is a very common quality in this industry. So that's not a problem at all. Unfortunately, Michael, that's all we've got time for today. But I'd like to thank you for sort of explaining how Switzerland, that small landlocked country in the middle of Europe, consistently is topping sort of the global innovation. It's generating billions in biotech exports for Switzerland, attracting both talent and the financing. So it's clearly an area, or it's a place where biotech is still thriving, and that's obviously really great news. And we look forward to seeing what happens, and maybe next year's Swiss Biotech Report will be even more optimistic. So thanks for sharing.
My pleasure. Thank you very much, Mike, for your time and insight as well.
So I'm curious how you, the audience, felt about the conversation. So please send us any feedback you have. And if you want to stay tuned for more editions of BioBiz Buzz, follow our LinkedIn page where we post alerts for future episode releases. So in closing, I'd like to thank Michael again for joining me. I'm Mike Ward. I hope you subscribe to BioBiz Buzz, and goodbye.